My top 4 crypto blue chip project picks for 2026. Alright, let's be real for a second. The crypto market just got body slammed. After the insane highs of 2025, the start of 2026 has been a painful lesson in gravity for a lot of people. We're looking at months of straight declines, all thanks to macro shocks and a fog of policy uncertainty. The total crypto market cap, once you take out the two big dogs, Bitcoin and Ethereum, is down around 44% from its 2025 high. Bitcoin itself took a more than 50% nosedive from its peak before finding its footing, and Ethereum is down roughly 60% from its own all-time high. Yeah, it definitely feels like winter is here. But here's the thing. While retail investors are glued to the price charts, a powerful current of institutional money is moving just beneath the surface. Most portfolios are still heavy on Bitcoin and Ethereum, but what if I told you the smart money is quietly diversifying? They're looking at the emerging contenders that could define the next chapter of this market. This isn't about chasing the next hype coin. It's about finding the projects building the actual foundation for the future of digital finance. In this video, I'm breaking down my top 4 crypto blue chip projects for 2026. The 2 giants that anchor any serious portfolio, and 2 emerging contenders that institutions are methodically adding to build a balanced foundation. Section 1. Bitcoin. BTC. The unquestioned foundation. First up, the undisputed king, Bitcoin. In a market that's all about volatility, Bitcoin is slowly but surely transforming into a more stable, institutional-grade asset. It's not just a wild speculative bet anymore. It's the main course for any serious institutional investor. When big money enters the crypto space, they aren't messing around with obscure altcoins. They are building financial products and on-chain solutions centered around Bitcoin. The core problem Bitcoin solves is simple but huge: counterparty risk and the slow debasement of traditional currencies. With its fixed supply of 21 million tokens, it has a built-in scarcity that screams capital preservation. This is why institutions, from family offices to public companies, are increasingly using it as a long-term treasury asset. The launch of spot Bitcoin ETFs was a game-changer, opening up a regulated bridge for traditional capital. While those flows have been a bit choppy in early 2026, with some weeks seeing big outflows as investors get spooked, the infrastructure is now locked in place. On-chain analytics show that despite the price drops, there's been consistent buying activity, which suggests a quiet confidence among the long-term believers. For 2026, Bitcoin's job isn't to 100x. Its role is to be digital gold, the gravitational center of your portfolio that provides stability in a crazy market. Sure, the recent downturn has been rough, but analysts are calling it an orderly deleveraging that's clearing out the speculative froth without breaking the market's structure. This kind of reset is healthy for the long run. Any balanced crypto portfolio for 2026 has to start with a solid allocation to Bitcoin, not as a get-rich-quick ticket, but as the foundational store of value for our digital future. Section 2. Ethereum, ETH, the global settlement layer. If Bitcoin is digital gold, then Ethereum is the decentralized world computer. It's our second blue chip, and it plays a totally different but just as vital role. Ethereum is the undisputed champ of smart contract platforms, the base layer where the future of finance is actively being built. It's the engine behind everything from DeFi and NFTs to the tokenization of real-world assets. The problem Ethereum solves is the need for programmable trust and value. While Bitcoin is a fixed ledger for one asset, Ethereum is a dynamic, programmable playground for countless assets and applications. This utility is what gives it such a powerful growth story that perfectly complements Bitcoin's stability. A huge driver of Ethereum's value is its proof-of-stake system. This lets holders stake their ETH to help secure the network and earn a yield, typically around 3 to 5% a year. This makes the asset productive, something Bitcoin just doesn't offer. The ecosystem is also constantly getting better. The Dencun upgrade back in March 2024 was huge, dramatically cutting transaction fees on Layer 2s and sparking massive growth. Looking ahead, the Pectra upgrade, slated for May 2025, is set to deliver another wave of game-changing improvements. This is a massive update that will improve the user experience by letting regular wallets act more like smart accounts, and it also boosts the validator staking limit, making staking way more efficient for both individuals and large institutions. Just like Bitcoin, Ethereum now has spot ETFs, which have torn down the barriers for institutional investors. And even with the recent market slump, on-chain activity on Ethereum remains incredibly strong, with daily transactions consistently over 1.7 million. This is a network that is being heavily used no matter what the price does from day to day. For a 2026 portfolio, Ethereum is your blue-chip bet on the explosive growth of the entire decentralized economy. All right, we've covered the two titans that should be the core of any crypto portfolio. But what about the next generation? Let's be honest, the market is getting picky. Smart money is getting very selective about which altcoins it backs. Before I reveal my next two picks, the emerging contenders that institutions are quietly scooping up, do me a solid and hit that subscribe button if you're getting value from this. It really helps the channel and makes sure you don't miss my future deep dives. Section 3. Solana, SOL, the high-performance contender. Now for our first emerging blue chip, and it's one that has handled the market chaos with surprising grace, Solana. Solana's pitch is simple. It's built for speed and scale. While Ethereum is all about decentralization, Solana makes a clear trade-off to deliver lightning-fast transactions and super low fees. This makes it a beast for applications that need high throughput, like decentralized exchanges and apps for everyday consumers. The problem Solana is tackling is crypto's nagging user experience problem. For crypto to really go mainstream, it can't be slow and clunky. Solana is engineered to feel like the seamless web we use every day, and as a result, its ecosystem is booming. As of mid-February 2026, the total value locked, TVL, in Solana's DeFi ecosystem has hit approximately $8.2 billion, making it the third largest DeFi ecosystem. What's really fascinating for 2026 is how strong institutional interest has been, even with all the market fear. While Bitcoin and Ethereum ETFs have seen money flow in and out, Solana-linked investment products have seen remarkably steady institutional inflows, suggesting that sophisticated investors see something different here. This confidence is also reflected in the growth of real-world asset, RWA tokenization on Solana, which recently hit a high of $1.66 billion in value. Of course, no project is perfect. Solana has been dinged for being more centralized than Ethereum and has had some network outages. But the developer activity is off the charts, and the core utility is undeniable. For a 2026 portfolio, Solana is a blue-chip bet on a high-performance future where blockchain is finally fast and cheap enough for everyone. The quiet but steady institutional buying suggests the smart money agrees. Section 4. SUI, the institutional dark horse. My final pick for a 2026 blue chip might raise some eyebrows, but it's a project that is making all the right moves to bring in serious institutional players. SUI. Born from the ashes of Meta's DM and Libra projects, SUI was designed from day one for scalability, with a unique object-centric architecture that makes managing digital assets incredibly efficient. The problem SUI is trying to solve is the sheer complexity of managing digital assets at scale on older blockchains. Its design is tailor-made for the next generation of digital finance, from complex derivatives to massive gaming economies. While SUI is younger than the others on this list, its institutional progress is picking up steam at a pace you just can't ignore. In a landmark move, both Canary Capital and Grayscale launched the first spot SUI ETFs in the US in February 2026. These products offer direct, regulated exposure to SUI and, critically, can pass on staking rewards to investors, a feature that even some Ethereum ETFs haven't managed yet. The launch of these ETFs is a massive signal, following a series of other institutional moves, including a VanEck ETN in Europe and strategic partnerships with major firms like Coinbase. While the initial trading volumes for the SUI ETFs are modest, the fact that they exist at all shows there's a growing appetite among big money allocators for newer, more advanced blockchain infrastructure. SUI's payments momentum is also surging, with stablecoin transfer volume on the network exceeding $100 billion for 5 months in a row. For 2026, SUI is the institutional dark horse. It's a bet on a next-gen tech stack built by a world-class team that is systematically laying the groundwork for institutional adoption. It's riskier than the established players, but the signals from firms like Grayscale, Canary, and VanEck suggest SUI is being positioned as a blue chip of the future. So there you have it, my top 4 crypto blue chip picks for 2026. This isn't just a random list of hot coins. It's a structured way to think about building a resilient, forward-looking portfolio. You've got Bitcoin, the foundational store of value and the institutional bedrock. You have Ethereum, the dominant smart contract platform and the yield-generating engine of the decentralized world. Then you have the up-and-comers. Solana, the high-performance Layer 1 laser-focused on speed and scale, which is attracting steady institutional flows even in a down market. And finally, SUI, the institutional dark horse with a next-gen architecture and the regulated investment products needed to pull in serious capital. The crypto market of 2026 is not the same as it was. The days of a rising tide lifting all boats seem to be over. Instead, we're in an era of precision, where capital is flowing strategically toward projects with clear utility, strong fundamentals, and regulated on-ramps. By balancing your portfolio with these 4 blue chips, you're not just speculating, you're investing in the foundational pillars of the digital asset economy for years to come. Now I want to hear from you. Which of these 4 projects are you most bullish on for 2026? And are there any other blue chips you think I missed? Drop your thoughts in the comments below.